Hello, Business 630 students. This is Professor Hassey. It's our Week 6 weekend update video. Today's date is Sunday, July 18th, and I'm going to be reviewing case number 2, the spreadsheet, which will help you with your electrics case. I will be introducing case number 3, financial statements and analysis, which is due in a PowerPoint format, July 23rd, Sunday, a week from today. And we'll just review and begin our discussions of financial analysis and valuation and mergers. We'll have another video on Monday, July 17th, which will go over some more specifics about financial statement analysis, which you'll be doing in your case number 3, and also talking about valuation and mergers. So let's first of all review our case number 2 solutions. Okay, the solutions and grades have been posted in your Blackboard and your grade center. I've returned your files to you. I was looking for you to do a capital budget analysis of a company in case number 2. You were asked, first of all, to calculate the weighted average cost of capital with a debt to asset relationship of 55% debt to assets. Thus, the equity relationship would be 45%. Remember, that has to total 100% of your capital structure. Then you were given that the interest rate on the debt was 8% with a corporate tax rate of 25% in this problem. You were told that the risk-free rate was 3.5%, a market premium rate of 8.5%, and a beta or risk of the firm 1.35. Putting all that together, you should have calculated that the cost of capital for this company on this given date for this analysis is 10.04%. 10 points are taken off for incorrect work in this part of the analysis. An after-tax cost of debt of 6%, a cost of equity via the capital asset pricing model of 14.98%. Weighting them by 55 and 45, we get 10.04%. Then I ask you to prepare a capital budget analysis of a $700,000 investment over 7 years with a salvage value of $55,000, fully depreciate the $700,000 straight line over 7 years of $100,000, 40,000 units sold per year, years 1 through 7, at a selling price rate of $45 a unit, and that will be inflated after year 1 at an inflation rate of 3%. The expenses are $35 a unit, inflated at 2.5% after year 1. Fixed costs were $75,000, also inflated at 2.5%. There's your project capital of 10.04% that you've already calculated, a tax rate of 25%, and a working capital percent of next year's sales of 9%. Putting all that together, you would determine that a total $2.37 million of cash flow would be generated off an investment of $862,000 today in year 0. What type of return is that? Well, if you discount that $2,037,000 at the the project cost of capital of 10.04%, you get $1,578,560. Compare that to the investment, you get a positive net present value of $716,560. That is an internal rate of return of 29.6%. A profitability index, the relationship of the discounted cash flow to the investment of a solid 1.83, and a payback of the $862,000 from the cash flow in a little bit over 3.1 years. With these numbers, you would have recommended that, yes, this project is acceptable. Pretty good analysis. Then the crux of the grading on this case was in this work here. Naturally, if you got the working capital wrong, I didn't take that into account in the rest of your analysis. Naturally, if you got this part wrong, I didn't take that into account of your risk analysis. So roughly 70% of the grade of the case was in this core analysis right here. The other 20% was in the risk analysis, which I was looking at the different outputs, what type of return that would bring. And if you change 3 key variables one at a time, what would the risk or sensitivity analysis? Naturally, the steeper slope is in selling price per unit. So that's what I was looking for in case number 2. This is very similar to what you're doing in the electrics case. Some of the variables are different. The working capital calculation's a little bit different. You have another line of expenses in the warranty cost, but basically the format is the same, and this is what you should be using as your template going into that. The years in the electric case are not 7, but 8, so you'll have to adapt your spreadsheets, but that's part of the assessment of the electrics case. Now, we will be having a review session next Saturday afternoon on Zoom through our regular student hour Zoom link. You all have that from 1 to 2 o'clock on Saturday afternoon. If you cannot make that review session, I will be recording it and posting it to Blackboard. That review session will consist of about a 20-minute to a half-hour review by me, where I'll be talking about some of the key variables and the paper, what I'll be looking for. And then the rest of the session would be questions from you that you might have. So again, next Saturday afternoon, July 22nd, 1 to 2 o'clock, might even go a little bit longer, a review session for Business 630 for the electrics case. Please take advantage of it. We had a review session this past Saturday. Only a couple people came. We have our Thursday evening review sessions. I urge all of you to put together drafts of your analysis, your spreadsheet, and send them to me so I can review and make sure you're doing it on the right path. Your paper is not going to be much good if your analysis is incorrect. So please send me your drafts and I will review them and return them to you. Here's the case analysis number 3 that you need to do for this upcoming week. You take the company that you selected, which you already did case number 1 on, and you're going to be doing in a PowerPoint format a review of financial statement and ratio analysis. You'll be looking at these 4 sections of financial analysis: profitability, asset management, liquidity, and debt management. You are to take one equation from that analysis and find those numbers for the quarter ending March 31st, 23 and March 31, 22. 2-year analysis of those numbers. Once you have that completed, then I'm asking you to do an analysis of comparing the analysis of the financial performance of the company. Why do you think the numbers changed? How do you think the company is doing? Give me an analysis of your analysis of this company. Now, I have also provided in case number 3, I've also, in the file folder, I've also provided a format example of the PowerPoints. Maybe some of you have not much experience in PowerPoint presentation. Remember, this is a case that you're going to do this work in 10 slides, okay? 10 slides. So this is what I want you, this is the format by which I want you to prepare this analysis. So take a look at this. This will help you set it up. Also answer some questions about what you're doing. Remember, you're taking 4 sections and taking one equation from each one of those sections and doing an analysis over 2 periods. That's what I want you to do. So here's a good sample format for that analysis. In addition to that, and also in the case 3 file folder, I've given you financial statement analysis from chapter 3 of your text, the key parts of the analysis, and perhaps the most important, this section that gives the highlights of those sections I mentioned in the case: profitability, asset management, liquidity, and debt management. You are to take one equation from each of these 4 sections and do your analysis of your company. That's what I'm looking for, of you able to go in and do research for the quarters ending March 31st, 23 and 22. So this is the case, is to prepare a presentation in PowerPoint that tells me your review of your financial statement analysis of your specific company. And I'll be doing a video also on Monday the 17th, tomorrow, also talking about this and what I'll be looking for. So please note that for Monday. So the case is to select two equation from each of those four sections for the period of March 31st, 23 and 22, and do your analysis and answer the following interpretation. Has your firm improved its performance from the previous year? Is the firm managed efficiently? As a potential investor, would you consider purchasing this stock? You should be able to make those interpretations from that analysis. And I go into some of the details right here. So read the case, look at my video on Monday, and you should have a great start to doing it. At the same time of all this, remember, we have 2 grades left in this class. We have this case number 3, and then we also have the electrics case due on July 30th. We have a review session next weekend, Saturday, to talk about that. You have a checklist, and there'll be more about that discussed in our Monday video as well this coming week. So that's where we stand this weekend, ending week 6. We have 2 cases going on right now, case 3 and the electrics case, all due in the next 2 Sundays. Until Monday, we'll talk to you then. Adios.